Welcome to the Crypto Compliance Podcast by Gatenox.
Welcome to Crypto Compliance by Gatenox, your go-to podcast for all things compliance in the ever-evolving world of cryptocurrencies, blockchain, and Web3. I'm Paweł Kuskowski, your host, and today we have two special guests with us, Martinho Pires and Jorn, members of the management team at the Digital Currencies Governance Group. In this episode, we break down the complex world of European Union regulation into bit-sized, digestible insights. So if you are a compliance enthusiast or just someone trying to navigate the intricate maze of rules, you are in the right place. First up, we dissect the EU regulations that will have direct impact on cryptocurrencies and blockchain. We'll guide you through the ever-evolving trends at the EU level concerning crypto regulations, giving you inside scoop on what's making waves and the power struggle at the EU level. But that's not all. We are peeling back the layers of EU regulations governing NFTs and stablecoins, addressing the challenges surrounding central bank digital currencies within the EU. We will shine a spotlight on decentralized entities under MICA and explore the ins and outs of the Pan-European Authority for Anti-Money Laundering. So whatever you are knee-deep in compliance or just dipping your toes into the regulatory waters, join us and we unravel the intricacies of European crypto regulation on this episode of Crypto Compliance. Compliance has never been this intriguing. About our distinguished guests. Jorn is the head of EU policies in Digital Currencies Governance Group. He is a specialist in the public and regulatory affairs, working on EU and national regulatory and policy issues with a focus on the financial services, banking regulations, payments, technology, data protection, and customer policy. Martinho Pires is a lawyer registered with the Portuguese bar. His practice is focused on banking and financial law and in the fintech, crypto, and blockchain sector. He advises clients of the public and private sector on regulations, regulatory compliance and licensing requirements. Martinho is a member of the board of directors of Portuguese fintech responsible for policy relation. Stay tuned because in the crypto compliance, we not only dissect current market events, but also provide you with actionable insight. We are not just talking about compliance. We are promoting the highest standard, addressing practical issues and fostering a culture of compliance in the crypto, blockchain, and Web3 space. Before we dive in, a quick reminder to subscribe to our YouTube channel, leave your comments, and let's amplify this conversation together. Your engagement helps us in spreading the compliance culture far and wide. And a special thanks to our sponsor, Gatenox, the fast network and tailored corporate KYC solution. If you're looking to onboard corporate client in a trusted and compliant ecosystem with Web3 capabilities, Gatenox has you covered. Check out their website at gatenox.com. So without further ado, let's jump into the realm of compliance excellence. Welcome to Crypto Compliance by Gatenox, where knowledge meets action. Hi, Jorn. Hi, Martino. How are you?
Hi, Paweł. How's it going?
Welcome in Crypto Compliance. I'm very pleased to have you here. And listen, can you share some overview of your role as head of EU policy at the Digital Currency Governance Group and the senior advisor to BlockReg advisors? And I know that we're diving immediately into some topics, and I'm very curious about the associations, what you guys doing, and what was your background, how you started with the whole crypto projects.
Yeah. So maybe I start here. So the Digital Currency Governance Group, or DCGG, is a bespoke sort of trade association and advisory firm for the crypto and blockchain industry. So we're advising our members on regulatory and policy developments in Europe, but also beyond. And we're helping them really to navigate the challenges sort of related to these changes in their business. And that means we advise on the one hand on the overall strategy, also in terms of engagement and outreach, and sort of help them with the outreach to particularly European policymakers. So that's in the EU, but also in the UK. So in the EU, when we're talking about policymakers, we often mean the European Commission, the Parliament, the Council. And we're helping them really with sort of the outreach plans. We respond to consultations on behalf of our members. We help them to participate in hearings and other policy meetings. We also, of course, keep them informed about sort of what are the changes and what are the developments. And sort of that also includes sort of the analysis of any regulatory proposals and their impact on their business of our members. So just to name a few, I mean, they include Tether, the stablecoin issuer. They include Bitfinex, sort of exchange platform, Ledger, wallet provider or infrastructure provider, but also some other companies like ZKV and Eigen3 Privado that work in the identification and verification space. We also sort of provide, as I mentioned, sort of advisory services, and that's more through our entity, BlockRec Advisors, and my colleague Martinho will perhaps expand on that. In essence, I mean, we just advise on compliance with the current and regulatory framework and the sort of its practical implications. So what does it mean for your specific business? What are the key considerations you need to take into account in terms of business readiness, choosing your home country, regulatory purposes, and, you know, taking into account requirements from what is needed in terms of staff, governance, tax implications, but also the licensing process. And perhaps I stop here and sort of hand over to Martinho.
Yeah, thank you, Jorn, and thank you, Paweł, for hosting us here. Well, Jorn already said a little bit what BlockRec does. So we are kind of we're a consultancy firm, so we are focused mostly on helping businesses in Europe or businesses that are outside of Europe but want to come to Europe. We're also looking into other jurisdictions now in order to comply with regulatory requirements that they might have, mostly in the financial sector, banking and payments and capital markets, and with a focus on crypto mostly. So that's why we help them with considering their business model, their structure, and we advise them on how they should do things, and we help them in their licensing procedures and in whatever jurisdiction that they decide to be.
Yeah.
So you must be extremely busy at the moment, right? With everything what's happening with at the European level, and you know the quagmire which is created at this level. Because I mean, I was involved in a number of different regulations, creation, cooperation with at the EU level, the payment directive, the data protection directive, AML. All these different regs, and right now I'm lost. You know, I'm actually, you know, there's so much to review and so much to trace. It's almost, you know, becoming impossible. How do you find this at the moment, and where would you say that for crypto market, crypto compliance people, where would you focus right now?
Yeah, perhaps I start, and then Martinho, you sort of dive into the details. I mean, in terms of the key focus area, I think, as you rightly mentioned, I mean, we've seen a lot of policy changes over the last 3 years here in Europe. And sort of the main pieces of legislation on the European level or at the EU level are really the market in crypto assets, or in short, MICA regulation, and the transfer of funds regulation, or the TFR, as it's often mentioned. But also the ongoing negotiation still on the remaining sort of AML package with the anti-money laundering regulation, as well as directive, and also on the future anti-money authority here in Europe. So these are still sort of ongoing works. MICA in particular, I mean, it's really the regulatory framework for crypto assets and stablecoin industry. It really sort of regulates the whole sector and sort of creates a fully fledged regulatory framework for any sort of service providers that provide services in the crypto area, but also its issuers. And sort of, if we look a bit beyond the EU, then of course, and sort of look at Europe more broadly, we have, of course, also the UK, which is also currently working on its regulatory regime on sort of crypto assets and stable coins. And the Financial Conduct Authority has certainly several consultations sort of outstanding on that as well. And, you know, when this is only sort of the key regulatory legislative pieces, but then there are also a lot of other pieces or initiatives that have an impact on the crypto industry, reaching from the EIDAS or Electronic Identity Framework to the Data Act to the DAC 8 proposal, or in information that's basically a proposal or a regulation that looks into tax information reporting requirements that will also include in the future crypto asset service providers. But we also have still new proposals that are currently being discussed by Parliament and the Council on the financial data access, on the Payment Services Directive 3 now, or PSD 3, as well as the payment services regulations, which all also will have an impact on the crypto industry or stablecoin industry here in Europe as well. And then last but not least, we have, of course, a lot of level 2 measures or requirements that are still being worked on by the European banking and the European securities and market authorities. So a lot, as you said, is still sort of ongoing, and we haven't even sort of mentioned here some of the future initiatives, because MICA, of course, always includes a so-called review process. So that means whatever hasn't been dealt with is going to be looked into again in the future. And here, I think DeFi and NFTs are of particular interest. But sort of, I leave it perhaps here with the overview. I don't know, Martinho, if you want to mention any more details sort of on MICA and what it means.
Let me jump on this,
Okay.
with some questions, and that's my, partially this is what I hear on the market, questions coming from some of the, subscribers. Is NFT regulated at the moment or not? That's one, that's something that it's repeatable. And I had, argument in Cambridge with one of the lawyers from crypto space. No, it was professor from MIT around regulations, whether NFT is regulated or not. So what's your view? Is it currently regulated? It's not regulated? Exactly. I thought so. Martino, tell me.
According nowadays, it depends. Well, if you have an NFT that is issued as a security, they'll be regulated as a security.
Yeah. So it's ESMA, right? It's ESMA, and that's the standard MiFID requirements.
Exactly, which is outside of MICA completely.
All right. Now, so on this point, okay, let's move on. I will come back to this question.
No. But even just to finish on the NFT thing, because MICA doesn't regulate NFTs. Mm-hmm. As long as they are real NFTs. So meaning they are really non-fungible tokens. So if, for example, if you fraction tokens to the extent where their fungibility is put at stake, there are questions, or there are at least a lot of people thinking, one of them myself, that you're actually kind of subverting the concept of an NFT in that logic. And also, it's good to put in mind that the definition of an NFT in MICA is a substantive one. So when MICA regulates NFTs, it's not looking at an NFT as, for example, a Bored Ape image only. It's looking actually at a representation of something that is non-fungible also. So, for example, if you have an NFT of a property right of a real estate, which is a non-fungible reality, that is considered an NFT, and that's outside of MICA. MICA does not regulate this at the moment.
What about the arts? The assets. I mean, the real assets.
The arts, like what? Like the assets that the NFT represents?
Yeah, the MICA definition of arts.
ARTs. You're talking about asset reference tokens.
Well, yeah, exactly.
Asset reference. But asset reference tokens are another logic completely. I think it's the most complex definition that exists in MICA. It's a definition
because this is like 90% of NFTs would be. Okay.
I would say no. I would say no. But I understand the confusion. I understand why the confusion comes on this. The thing is, an asset reference token was created, that the concept was created, and Jorn, please jump in at any moment where you think to say something. An asset reference token was a concept created by the EU legislators in order to address the stablecoin of Libra that was issued by Facebook. So the idea that was behind the asset reference token, because you have, and if you read MICA, asset reference token is referenced as a payment instrument, not really as an asset. And the idea is that the asset reference token represents a stable value, or purports to represent a stable value, and can be backed up by things like rights or other things than an official currency, or more than one official currency. So the definition was completely made to try to grab everything that could fit the logic of Libra, which was a stable coin that had the purpose of representing a stable value, but was backed by a basket of currencies and other types of instruments. And NFT,
and it sort of does also, perhaps to sort of quickly come in here, and it does also address sort of commodity tokens. So if it's something backed by commodities, be it gold or any other metal, so that's generally at least in the thinking of the EU Commission, that sort of has been always considered as what are arts. So it's sort of something backed by a basket of currencies or by commodities, really.
Exactly. And so an NFT itself, first of all, a commodity or a currency or a basket is something in a way fungible, or has a certain degree of fungibility, where an NFT is not it can represent a right, for example, property right, it's true, but an NFT can also just be something in itself, right? Like, for example, when I buy a Bored Ape image where the metadata is represented in the NFT, the idea is that this image is, and that's even the logic, some kind of unique thing that is in the format of this NFT. So it's not really an NFT that doesn't represent a stable value. That is something even speculative, right? Why am I going to buy this Bored Ape? Why is the value of this Bored Ape? It's not pegged to the dollar or something. Yeah. It's not under the ART definition, but I understand that the ART definition, because of how it is, it's a little bit complex and complicated to understand. Also in practice, I'm eager to see the first cases or the first attempts to try to frame an asset reference token.
Stablecoins. MICA versus stablecoins.
Jorn, please.
Yeah, I mean, it's not even versus. I mean, it does sort of regulate. So, I mean, it does make the distinction between, crypto assets or the likes of Bitcoin or Ethereum and sort of stable coins, as well as asset reference tokens. So we discussed already asset reference tokens. Stable coins are really coins that are pegged to one currency. So often, the dollar or the euro or whatever other currency you would use as to back your stablecoin. MICA is, if you look sort of overall at MICA and sort of look at, is it sort of good or bad? I think sort of for the crypto industry more widely, I think it's sort of a good piece of regulation that at least sort of tries to sort of regulate the sector, but also sort of provides sort of legal clarity. If you look at sort of stable coins, there is an element whereby MICA is not sort of the most friendly regulation for stable coins and the use of stable coins. And I think that's sort of problematic. So particularly if we look at circulation limits, also if we look at some of the liquidity requirements that have just come out sort of in the level 2 discussions. So these are sort of potentially rather problematic for the use and sort of wide adoption sort of stable coins here in Europe. So if we look at that, I think MICA could still be improved, or particularly some of the level 2 requirements could still or need to be significantly improved there.
And when you look at the European level, right, and in relation to crypto, What's your, let's say, perception in terms of EU, bodies' response to the crypto market? Right, you think that it's actually crypto friendly? Do they see opportunity for European Union to grow in this space, or it's quite opposite? It's different when you talk with different groups, right?
Yes. So I think, again, the answer there is it depends. If you, it does sort of create legal clarity and regulatory clarity and certainty. So I think that's a good thing. It also allows companies sort of, once you have a license, to sort of passporting that across the EU. So that means you just need one license in the EU and you can use it, or in one country or an EU member state, and you can then use it across the EU. So that's kind of an advantage compared to sort of the current fragmented regulatory environment where you have some member states where you already have some national requirements in terms of licensing and others where you don't, but you can always, in principle, only act in one country. So it does sort of provide a great opportunity for the sector. It also, helps probably in terms of perception of the industry and creating a bit more trust, perhaps, with some of the consumers that haven't sort of used crypto assets, cryptocurrencies, or sort of stablecoins. But then, and that's sort of the other element where you probably have talked to some of those, it is still sort of burdensome for a large part of the industry. I mean, again, we have to sort of look and make the distinction. There are a couple of bigger players out there which already have hundreds or a few hundreds or even thousands of employees, and they are sort of big enough to sort of manage the regulatory requirements in terms of compliance, having the necessary staff that is required to ensure compliance, really manage sort of the company, have the sort of necessary governance structure in place. But of course, crypto per se was sort of came from a very decentralized point of view. So it was sort of decentralized. So you often had sort of small structures, and you still have a lot of companies that are rather small. And for those, it is, of course, a big challenge in terms of meeting all the regulatory requirements, knowing even what do I need to do? How do I need to structure my business? What are the requirements in terms of governance, in terms of own fund reserves, capital requirements, just sort of how do I structure my business and what does that mean for me? So for a lot of companies, it could be rather burdensome, and there is a risk that you sort of filter out a couple of big companies that will comply and manage that sort of easily, and a lot of smaller companies that for which the costs are simply potentially too high, and that will look into either sort of going underground, sort of leaving Europe altogether, sort of trying to restructure and sort of form a DeFi kind of company. So for a lot of the industry, this can be still very, very difficult in terms of complying with the regulatory requirements altogether.
And Martina, but from your engagement, do you see that at the EU there are some supporters of crypto, or quite opposite? Do we see this as the body was just trying to almost force out crypto from the market?
I think the idea I have, I think Jorn being discussing more with the authorities as a clearer picture of this. But the idea I have, and it's not only in the EU as in the EU institutions, but also from national perspectives and national people that I've been talking to, is that, well, you have very different interests and stakeholders here at place, and the policy level at the center has to answer to all of these pressures from all the places, which makes it, and these pressures are both national, so there are countries that have an interest in developing or improving, let's say, the status of European companies in this market. And so they would even see this as a moment for innovation and to support innovation. And if you read, for example, let's say the documents, both MICA, but also the DLT pilot regime, you have, it starts already by talking about innovation and supporting innovation in the financial industry and seeing the benefits of the technology. At the same time, they also see the risk, and some European regulators, I'm thinking, for example, the European Central Bank and European Banking Authority, also look at this with considering financial stability issues, right? Like, how is this going to affect, for example, the transmission of monetary policy? How are stablecoins going to be used as payment instruments? And so at the same time, you have a local industry that wishes to grow and develop and sees that, because this is the jurisdictions in which they are in, that they need also some regulatory comfort, let's call it like this, to be able to develop their businesses. And you have foreign players that are interested in coming to the EU and exercising, and they already want also a certain level of regulatory comfort or predictability that they can find anywhere else. There are players that see MICA as the beginning of a competitive edge that Europe might have vis-a-vis, for example, the US, where the regulatory answer at least is more complex, difficult, more less organized. Let's put it like that. So what I see a very a picture that is very different, very plural. I think there is at least an acceptance from regulators that there's nothing they can do against it, and so we better accept this and try to insert this as we can. At the same time, there's also and this is a thing that I've been noticing in the past, in the recent past, which is a lot of regulators talking about the pressure that traditional banks and traditional financial institutions also look into this. So there's another also stakeholder interest in seeing how this is. We see, for example, if you look at how fintech businesses are regulated, or at least the rules for fintech businesses, they are made for incumbent players mostly. It's very difficult for, as Jorn was saying, it's very difficult for small companies that wish to develop in the payment sector, in the technology in the sector, to fulfill those requirements. And what happens usually is that they end up being bought by banks or by bigger player institutions. So that's what I see. I see like a very big mosaic. There is interest. I think there is interest, and the door is open. But so
let me play this back. So if you say that it's as usual at the European level, it's pretty complex because there's so many stakeholders, countries, industries which are trying to kind of steer the conversation in their way, right? So it's very difficult to say that there's either pro or con crypto market. It's just simply that the working through different interests and moving forward.
Yeah. And I think we also need to sort of take into account sort of that the picture has been somewhat changing, also influenced by sort of industry developments. I mean, FTX was, of course, a big shock. And sort of, whereas you had sort of the commission, and we have to think about that the initial proposal or the discussions took place since 2018, 19, sort of with a proposal, I think, in 2020. And that, of course, has been sort of strongly impacted when FTX happened sort of at the end of last year, when a big player that was considered to be one of the more reasonable ones was suddenly going bankrupt. And sort of when regulators looked at practices that have happened there, that of course sort of let all the alarm bells ring with regulators, and you had a bit of a shift. And you could also see that during the discussions, particularly in the European Parliament, where you had sort of openness towards the crypto industry beforehand, whereas sort of they became much more critical after the fallout of FTX, but also some of the other companies that went under sort of in 2022. So I think that also sort of influenced the discussion and sort of gave the critics a bit more ammunition as to why you need to be strict, and why you need to have a very sort of all-encompassing regulatory framework for the industry.
Yeah, I heard, when FTX happened, that at the European level, there's kind of group created to see whether FTX would be picked up or prevented at the, when implemented the EU regulations. And basically, we understood that it's not possible, right? But I think, at the same time, it's almost like, it's very difficult if someone wants to commit crime, which was FTX was pure crime, right? Then it's very difficult to prevent this, even if with the best regulations.
Of course, no, that's fully understood. But of course, it was used by a lot of regulators to support their argument as to why sort of strict regulation is needed and why, it's perhaps the sort of perception that crypto industry was not always considered as, what do you call it? A well-perceived sort of industry or an industry at all. So this perception, of course, and the sort of cases of bankruptcies of, also Terra Luna, etc. Last year, I think really sort of were used by a lot of critics to underline their argument.
And you, Martino, you mentioned that there's very similar difficulties faced by fintech companies, right? Mm-hmm. How do you see the intersection between fintech, traditional finance, which is mostly banking in Europe, and then the crypto assets? How do you? I mean, it's quite because it was already complex area, right? And there's like big clash between those two effectively. And then, additional complication coming from the crypto assets, right? And obviously, the continuous problem between crypto assets and banking is that banks simply are rejecting or refusing to bank crypto businesses. We have the whole area of, let's say, bank as a service, or I would say IBAN as a service providers, which are bringing additional, complication, but also, bringing those two parties together. How do you see this complex structure, fintech, traditional finance, banking versus crypto?
Well, it's a very interesting question. A lot of people consider like crypto kind of a fintech development, and with all fintech developments, it has a problem of where does technology makes it so different from what traditionally exists. And that's a problem for regulation, right? Like how different, how special from a technological point of view is this product or service that these people are doing from what already exists, that it should be regulated differently. What I see in the market in terms of connections is that a lot of people that are from the fintech sector, which are usually like startups or at least companies that are becoming, there are also fintech developments coming from more traditional players, from banks and from investment, but mostly we're talking about, when we talk about fintech companies, we're talking mostly about startups. And they adopted crypto, and they saw crypto as something that would be interesting to test their technology, to test their products, they also saw an opportunity, and I see some places or some companies, for example, in the UK, there's a very strong EMI and payment markets for fintechs, and so there's a lot of small companies growing there and developing their business there, and some of them are looking also into crypto because they see, for example, now with MICA, with the stablecoins as e-money tokens. So they are looking at this as opportunities to expand and trying to develop other types of products. And also in places where, for example, banks and traditional institutions also don't have a lot of expertise in crypto. They have a lot of expertise in banking. They have a lot of expertise in payments. They have a lot of expertise in trading, financial markets, financial intermediation, which is where fintech companies were providing services mostly. But in crypto, they don't have a lot of expertise. And because they were very afraid of how this working, a lot of fintech companies are seeing that this might be an area of interest to develop in which to get a competitive edge against banks itself. But again, as you say, there are many challenges, even with AML5, which was the first document that regulated or that purpose to or that opened the door to the creation of registration for crypto businesses in Europe, and in some way legitimized them, so to speak. Even with that, crypto companies have face a lot of challenges, as you say, in opening bank accounts, and they are looked upon, specifically small crypto companies. Big players already having another dialogue, having another way of seeing, and etc. But it's not a very easy task. But there are points of contact, there are interactions, and I think they are to be developed in the future.
Yeah, one argument which I always bring, when there is conversation between crypto businesses and banks, is that effectively we are under the same, and both crypto and banks under the same AML regime, right? So if you are saying to someone who is regulated in a similar way that we treat you as a criminal from the outset, right, and money launderer from the outset, irrespective of what processes and systems you have internally, that's kind of ridiculous, right? But it's, this question is coming and every time. When you have the intersection between crypto businesses and banks, when they say like, listen, I'm worried, I'm against any risk related to crypto. And even if I know for the fact that many of the crypto businesses would have better systems and process because, they simply tap on better technologies which are available right now, right? If you compare traditional banking versus crypto, they have the newest technology, the best service providers, typically they focus, and I know this from a number of clients which we are servicing, that they rather create big compliance team than sales team. This is kind of the way that these companies are evolving, and then they have this argument, oh, you are high risk because you are in crypto. So I mean, what's your answer when you have this type? I'm sure you have these questions from your clients, right?
No, I mean, not sort of really from our members, but I mean, there is an issue, as you rightly pointed out, in terms of access to bank accounts. And we hope for the industry that sort of MICA will sort of put an end to it, because once you are a regulated entity, you can sort of demonstrate also to banks that you do have a supervisor. So, I mean, until now, it was, of course, often very easy for banks to say no, because, you simply were an unregulated business, probably sort of providing financial services. So, I mean, in terms of risk appetite, you could almost understand banks that would say like, well, hold on a moment, that's sort of far too risky for my risk appetite. So I'm not sort of on like boarding you and sort of allow you to use sort of banking services or offer the banking services to you. So I think with MICA, that is probably going to change even a bit more. I mean, Martinho already mentioned sort of AML. That this has already sort of captured, or AML5 has already captured crypto. And of course, with the new AMLR framework that is currently still being discussed, as well as sort of the transfer of funds regulation, I think, there is really the requirement to make sure that you fulfill all your AML obligations. So I think that will sort of help to sort of gain access to the industry. There is that element, which again, Martinho also referred to, that banks are interested in the technology. And I think there is a sort of great interest there from banks, particularly if we're talking about stablecoins. I think that is something a lot of banks are probably looking into in terms of, what can they provide there, and potentially also can they buy other companies that already have the technology, or simply use other providers for that. So I think the technology, again, blockchain technology, is very interesting to a lot of banks. So I think we'll see them also exploring that a bit more widely, and hopefully therefore also cooperating a bit more with crypto asset service providers, or sort of the crypto industry more generally. And again, this is also something we've seen sort of previously in fintech. So I mean, before I worked for fintech companies, and initially it was sort of very antagonistic. So if you looked at payment, you had third-party providers or payment services providers that were offering the services and were often sort of very antagonistic towards banks. That, of course, has changed, and there has been a lot more cooperation. Of course, a lot of banks also simply bought some of the fintech providers, or other big companies bought fintech providers. And I think this is probably something we will also see in the crypto industry. So I think there is probably going forward a lot more room for a cooperation in some sort as well.
What is the current, let's say, landscape for developing the central bank digital currency at the European level? Like, is there any conversation? Where is it going? Is it going to be related to crypto based on blockchain, or is completely, because I hear this from different sources that it's going to be either on blockchain or not, and both sides are being recognized, but at the same time.
I think overall, if we look at sort of central bank digital currencies, there is a bit of a divide. Obviously a lot of countries are looking into it. And the discussions around Libra, which Martinho mentioned earlier, sort of really pushed central banks into looking into this. So you have a couple of central banks that have also looked or are looking into DLT or blockchain-based central bank digital currency. But you also have some of the traditional banks that sort of looked into digital currency, but rather running it on the traditional rails. And I think if we look at the euro or the digital euro, I think the conclusion currently is that it's probably still running on the traditional rails. Again, you can see why central banks prefer that, because it's already in the wording. I mean, the whole central bank means it's sort of centralized, so you sort of want to have control. Crypto, of course, is based on the decentralized idea, so it's controlled by the community, but not by someone central, or not by an intermediary, or a bottleneck, if you like. So there's sort of two fundamentally different concepts between a blockchain and sort of central banks, simply because by decentralized versus centralized. So I think you will probably see in a lot of developed countries, central banks rather going for a centralized approach, and probably not sort of using the blockchain technology. But yeah, that's sort of my take.
What's the difference then? If this is not blockchain, what's the difference between simply having the current euro simply provided in the digital form versus central bank digital currency? What's the difference?
Well, it's all about control and sovereignty. So particularly in Europe, there is always that fear that, or by the central bank, that payment systems, and they're looking particularly at the two big card schemes, as well as other sort of payment services providers, and also banks, that they have much more control over sort of monetary policy, and particularly sort of payments. So the digital euro is almost seen as something very political, whereby the central bank is trying to sort of retain some of that sovereignty in terms of payments and monetary policy. Perhaps, Martinho, I don't know if you want to.
Yeah, no, Jorn already spoke about about sovereignty. I don't know. I've been what the European Central Bank and what national bank regulators have been trying to kind of defend on the central bank digital currencies is mostly that it will benefit, for example, in terms of disintermediation, at the same time trying to say it's disintermediation of access to central bank money, so banks will stop being the intermediaries of this, but at the same time banks will also play an important role on this. At the same time there are limits. So if you look at the proposal of the digital euro and how they are planning to do it, I'm talking more here on the digital euro specifically, it's kind of trying to please everyone in a way without pleasing anyone, because it's basically a different way of having coins and currency. Like
Exactly.
you're going to have a limit of 3,000 euros of digital euros to use. So it's basically, and okay, you have a way of transmitting this between people, between two wallets.
But you need to still have wallet provider, right?
But it seems, but it's not programmable. It's not programmable money. Exactly. It's not on the blockchain. It's so it's this idea of like we have to. We talked a little bit about before, like when I was talking about MICA, that regulators thought like, oh, okay, we have to regulate this. There's no way, and we have to accept that this is the new thing of financial innovation. And I think with central bank digital currencies, the central banks, the European Central Bank, consider like we need to put ourselves here just because everyone is doing this. China is doing this. Other banks are doing this, so we need to be here. But we are not really. And every time I go to, I'm in the focus group of experts here in Portugal, and this is public, so I'm not breaking any kind of confidentiality with this. But every time I go to these meetings and they discuss things, there's always this idea that they are presenting the project very well and explaining and giving all the information that they want, but you don't really understand what is the benefit that this is going to bring in practice to this. So that's my 2 cents on
and I think that's sort of a central discussion, particularly here in Brussels, and a lot of criticism from the industry, but also a lot of parliamentarians and other policymakers is like, well, what's really your business case? And I think you could almost argue, well, there isn't really, but it is a fully apolitical project.
Mm-hmm. Mm-hmm. Exactly.
In my previous company, Coinfirm, we were working together with Mitsubishi Bank, right, in Japan on the MUFG coin back in 2017-18, right, which was very, let's say, forward thinking at that point of time. And, it was effectively coin which was pegged to yen, which exactly is reflecting the stablecoin, right? And the benefits, one of the huge benefit was, simply speaking, how easily it can be accessed by the current wallet holder who is already in crypto, to simply have this exposure to yen, right? And suddenly you have, I don't know, like hundreds of millions of clients who simply want to have this exposure to yen, and that's something that it's clear benefit if you use the benefit, let's say, or the business case for euro is to have this central bank backed digital currency which is on blockchain, but you have this in your wallet, right? And suddenly you have immediately millions of users, and that's how you can get better traction for euro as opposed to US dollar, right, in the controlled environment. So I think, on one hand, I would say that CBDC, unless it's on blockchain, it doesn't make sense almost, or the benefits. So it's minimal benefit, right? And once you go into blockchain area, that's a huge benefit, and it's almost like either you go this direction or that direction. And because at the European level, I think the belief is that everything which is connected with blockchain is complicated. We don't know how to deal with this, so we use traditional things because we understand them. And I think, Martinho, what you said, it's exactly right. The way they know what they do, so we repeat the same, right? And we use the same what was happening to try to figure out the new things, but the new thing doesn't work because it's a new thing, right? So it's, for me, it's exciting, but at the same time, it doesn't make sense, if we don't go full speed with this. And I think UK is trying to grasp this at the moment, and they understand. There's a lot of discussion around stable coins in the UK at the moment, but I don't think Europe is completely grasping what actually is the opportunity.
I think they do, but I think there is also the deliberate decision sort of not to use blockchain, and I think partly it is maybe sort of related really to the sort of decentralization and sort of how it would be used. The other one, I think we have to sort of take also into account when we talk about Europe. I mean, it's sort of a highly banked region of the world. So in terms of payments, for your payment purposes, you have so many possibilities in terms of, I mean, either using cards, but also using bank transfers, or sort of now with, PSD2, using other service providers, third-party providers, as mentioned before, that can initiate your payments and whereby you can pay. So if you look sort of nowadays, if you do online shopping, I mean, you always have a plethora of sort of payment options available, but they're all based on your bank account. And pretty much everyone in Europe that wants to have a bank account has a bank account. I mean, there's sort of very few that don't have that. That's completely different if you look at other regions of the world. I mean, in Africa, Asia, etc., we're talking about a completely different structure. And there, of course, blockchain is very interesting simply because it allows people sort of to directly access it and sort of not using any intermediaries. In Europe, I guess, and sort of the US, you always had sort of very efficient sort of payment systems that have sort of improved over time and sort of are widely used, very easy to use. I mean, I remember a couple of years ago when sort of cards introduced contactless payments. Now sort of everyone just taps. And it's kind of very, very easy and intuitive. So a lot of people asking,
why do we need anything else, right?
And also, a lot of people don't care what's behind it. I mean, let's be honest, blockchain is just the technology, that sort of, or the infrastructure behind it. But sort of for the user itself, a lot of users don't care. I mean, they just want to pay or make sort of financial transactions.
But this would be, if it would be based on, Ethereum or, Avalanche or whatever, right? It could go outside Europe to these countries, which basically right now cannot access the bank accounts, right? And that's something that could promote euro outside European zone, right? So that's exactly where I see the biggest benefit, and that would bring liquidity, that would bring more value to Eurozone, because it's stronger euro. It's actually helping those countries. So that's exactly where I would see huge benefit.
I agree, but then at the same time, you can also argue that sort of hole, if you like, can be plugged through. Even banks, sort of private banks, sort of issuing stablecoins, and sort of a euro sort of stablecoin that could be issued by a regulated entity, be it a bank or a stablecoin issuer, can sort of have the same function there. So, I mean, you don't necessarily need to have central.
No, exactly. But I think this would be exciting part to do for the central bank.
I agree. I mean, I'm not sort of I don't work for the sort of the ECB, so I mean it's up to the ECB obviously sort of to decide that. But sort of the current thinking still seems to be, well, we probably rather use it sort of on still the traditional railways, but maybe that is sort of changing at some stage. And again, even with a digital euro, which effectively may only sort of come into play as of 2027 or 2028. So we're talking about sort of 5 years ahead. So we don't really know what sort of the world will be looking like in terms of payment structures and sort of how widely used sort of blockchain will be by then. So I assume it will be sort of much more widely used. So yes, you can argue, it is a bit of a lost opportunity, not basing it on a DLT or blockchain technology, but well, that's the political decision that has been taken or is likely to be taken, sort of, at least as we can currently see it.
And there's a lot of discussion for a number of years, right, on creating pan-European authority for AML, anti-money laundering, But this discussion is, again, there's been discussed for a number of years, and I think there was already a decision to create this in Rome. There's a lot of, let's say, almost people indicated who will become the head of this authority, and suddenly it went quiet, and we don't see anything. Where we are with this European, authority.
Yes, I think, it's part of the AML package. So still being discussed at this stage. We are what is called the sort of trilogue discussion. So Parliament and Council, or the member states, have sort of made their provisional opinion, and now they're sort of really negotiating in the so-called trilogue process together with the Commission towards the final text and the criteria. I think the discussion have been prolonged a bit by a decision that Parliament can also have a role in sort of defining where the agency should be based. So far, whenever the EU decided on where to place a new European agency, it was often the member states, or it was exclusively the member states that decided on that. I think the decision, I think it was sort of actually the ECG, that the European Court of Justice, that decided that the Parliament sort of can have a say in that as well, and that means, of course, Parliament is sort of flexing its muscles in terms of where it should be based and what should be the criteria for having a AML authority. But in essence, I think it's coming. There's no question about it. The question is still, okay, where will it be based? And that's still part of the usual, I don't want to say it, but sort of horse trading when it comes to where an agency will be placed and which is the country that will manage to be the seat of the new AML authority. But,
what is the final scope of the authority? Is it more reporting, or, I don't know, crime discovery at the European level? What's the...
it is really sort of, the AML sort of making sure that the AML requirements are effectively enforced. So far, it has been based under the European Banking Authority because, of course, a lot of the AML requirements were primarily placed on banks. Now, with the additional scope of having also crypto service providers, but also payment institutions and others sort of in scope of the AML requirement, it kind of makes sense to sort of outsource it out of the banking authority and sort of put an authority that really looks at all different entities or obliged entities that are required to fulfill sort of AML requirements. So I think it's almost like a logical process. It was initially placed under the banking authority because banks were there and were the obliged entities. Now, with an increased scope, it makes sense to have it to have a separate entity for that.
And in terms of the current, let's say, challenges and opportunities in crypto, where would you see, what's the next phase for growth in crypto? Do you see anything which is really exciting? I have discussion, with some of the regulators or, governance bodies around bond issuance at the European level based on blockchain, and that's something that it's becoming more and more discussed. And I think a couple of projects already under MICA wants to do this. Martinho, where do you think is the next growth coming?
Well, bonds bond issuing is a situation, and it's actually one area where traditional finance is already looking into. Also, because you have the DLT pilot regime for the issuing of securities as bonds and shares and fund investments, and to test that. So we have 3 years of where projects can try to use that, market infrastructures can try to use that and try to see if it develops. It's an area. Although I think the area where, and this is where I see a lot of movement happening, is with real estate. I see a lot of tokens connected with real estate, NFTs for the use of properties, share rentals, investment on real estate, monetization of real estate. I see a lot of situations happening there.
And why do you think so? Why do you think it is? I mean, is it because there is money in real estate, or it's simply because it's not so obvious case for? I mean, it's on one side it's obvious, but on the other side it's kind of, why real estate? Why not, I don't know, cars or any other property?
It's good. I think it's because the market is hot.
Right.
Yeah. Or so like you have a lot of money there. You have a lot of investment, like a lot of investment funds. A lot of have been investing heavily, specifically in Southern Europe, but also in Central Europe on real estate. And so they have a lot of products, and they want to see how they can diversify this investment. And by tokenizing this, and in a way, it's kind of almost like you're doing a security out of a real estate object, and then you can trade it or sell it and monetize it. I think that's why they're looking at, and there are regulators. I know 2 jurisdictions where regulators are already, financial regulators are already kind of into this project, at least in a testing stage. So,
can you share which one?
Yeah, it's Luxembourg and Portugal.
Okay.
The Luxembourg and Portugal are already the jurisdictions where at least some projects have approached the regulator, and the regulator has been interested in seeing how they could develop this. Because real estate is not really, I think it's also because it's a safe place in terms of financial risk and the spreading of risk. Like, one thing is you do something that, like an ETF or something that might have a systemic risk in the capital market. Another thing is you go and try to do it, like, I don't know, 2 or 3 buildings or 2 or 3 condos in some city in Europe, and try to do something with that. But that's an area where I see a lot. And then, I don't know, you have the traditional crypto lending. There's a lot of people now also seeing with when MICA is coming to place, how is crypto lending rules or not, if this is part of the service that an exchange has to operate or not. So I see that also as an area that is hot, but I would say that. And then, of course, you always have, we're talking here about the businesses that crypto is going to have, but we're also trying to see how the regulators are going to take care of the so-called fully decentralized institutions. So how DeFi is going to be taken care of, because this is what. And if you look at MICA has, like, on what Jorn was saying, that there's already an evaluation set up to see how but it's not only an evaluation of MICA itself and how MICA is implemented, but also of the market in crypto assets and how it develops. And MICA specifically says that ESMA, for example, has to look into this and consider how DeFi is developing, how NFTs are developing in the market. And so I think from a regulatory side, that's where the movement is going to go now. But
why ESMA would be looking at the decentralized space? That's why ESMA should be.
ESMA, I think they put it there because crypto is a complex thing for regulators, because it's the services that are offered are, in a way, and we discussed here already some, right, with stablecoins, which are more like payments instruments. But you also have a lot of things that are more similar to traditional finance, capital markets instruments, ETFs. And MICA doesn't take care of security. It says, okay, the ball of securities is in the securities regulators' court.
Yeah.
That's how they're going to do it. And so I think they're looking at DeFi because they see a lot of the applications of DeFi, like money makers, ETFs, perpetuals, and all that stuff that is being developed there, as more financial, like what DeFi, the most payment instruments that are developed there are algorithmic stablecoins that are already taken care of also by MICA. So I think that's why they put ESMA kind of investigating this and researching into this. The French regulator already has looked and made a report, or is doing a report on this also on DeFi, because they're also seeing that there's a lot of liquidity in crypto that is is mostly token based, so it doesn't touch fiat, and that is I'm not going to say kind of a dark world, because it's not dark at all nowadays. It's very illuminated and with very different colors, but it's operating in a way that the regulators don't know yet how that is or not, and so and I think that's going to be also interesting, because decentralized, or MICA calls them fully decentralized institutions. I think that's how they put it, or protocols. I don't recall the last word, but it's fully decentralized. If the services that are set up in MICA are provided by these type of protocols, MICA doesn't apply to them. And now the question is, the $100 question then, what is a fully decentralized institution, right? It was made for Bitcoin. It was made in order to protect a little bit of Bitcoin, because Bitcoin, I think everyone agrees on the table, that is at least the one that has the, I'm not going to say the greatest, but probably the best degree of decentralization. But that, what about other protocols? What about, I don't know, I mean, not even Ethereum. What about other protocols, layer 2s and everything that is being developed? Yeah. What about DAOs and how DAOs are or not? And so, and I think from a regulatory perspective, that is also going to be an interesting thing to see, and also a way that's going to affect a lot of the market, right? In this, I know that the DeFi market has been a little bit silent since Terra Luna crashed, and everyone is like looking more, mediatically speaking, the people that are looking into DeFi and they're following DeFi can probably give a completely different opinion, saying there's a lot of things that's being done, and probably there is. I'm not putting that into question, but mediatically it's going a little bit under the radar. DAOs also going a little bit under the radar. So it's so I don't know now with the halving and the perspective rise again of the price of Bitcoin, and the crypto market also going wild again, how these protocols and these companies are going to perform, and how the regulators are going to look into this on this part.
Yeah. And I think perhaps to just add on that, I mean, sort of in addition to sort of ESMA, I mean, also the Commission has been asked to provide a report, and that's sort of part of the usual sort of review process of MICA. I mean, as every European legislation or regulation, there's of course always a review clause in there, which basically deals with all the issues that haven't been addressed yet, and that sort of includes sort of NFTs as well as DeFi. So you can expect sort of a report from the Commission sort of on that, either by the end of next year, or sort of looking into that it's a year of change, and that you will have a new Commission by the end of next year, maybe even early 2025, that you will have that Commission report, and then sort of looks and sort of will give a first assessment of whether the Commission thinks there is a need to regulate DeFi, sort of NFTs or any other issues any further, or whether they think the current framework that is not yet in place but is going to be in place as of next year is sufficient to address the sort of changes in the sector.
Final question from my side. Where do you guys have the idea to create a Digital Currencies Governance Group, and to work with the regulators? And I think that's something that many people would consider not to say boring, but at least challenging in so many different ways, right?
No, I mean, it's really been set up to sort of foster really the dialogue between regulators and the industry. And I think, it was almost inevitable that I think, I mean, I only joined sort of last year, but I think it was founded sort of in 2019. And that was, of course, a time when everyone was talking about sort of MICA, sort of the sort of initial proposal and the ideas from the Commission. So it was very clear that regulators would be looking into sort of regulating the sector. So I think once you sort of accept that as a sort of premise, then I think it's very natural that you need to sort of try to create a dialogue, also explain what the sector is doing, how it is developing, because again, a lot of things are not always fully understood. And that even starts with the technology as such as a basis, and also, what it brings or what it can bring to financial services and a lot of other issues. So I think it was very important to really ensure that you do create that dialogue with regulators, and that's what we've been focusing on behalf, of course, of our industry members.
Yeah. Sorry, Paweł, you were going to say.
No, I'm always curious. Where is the line between like kind of cooperation and lobbying? Where do you draw the line? Or are you actually on the list of lobbyists?
We are. I mean, we are
Okay.
registered. We're registered with the European Transparency Register. So we disclose sort of our membership and how much is sort of roughly spent.
How many lobbyists you have in Europe? It's like thousands, right?
Well, I mean, not sort of ourselves. I mean, as sort of association or sort of body,
Yeah.
we only have a couple of people. But of course, if you look at the Transparency Register, there are hundreds of companies and entities, associations, or other forms of representation sort of listed there. So I think that's really sort of good for the industry. It also does provide the sort of transparency that you do need when you interact, and you also from a policymaker, you want to know with whom am I interacting, and am I landing sort of in some bad press because I speak to someone. So I think it's quite crucial that there is some transparency out there. But as long as that is the case, I think a lot of these organizations and associations and companies do bring a lot to the policymakers, because again, you have to think about, from the European Parliament perspective, you have 750 members of the European Parliament. They are meant to sort of address a wider range of issues, and sort of crypto and financial services is only one issue. I mean, you have sort of environmental legislation, you have labor law, you have tons of areas where the EU is trying sort of to create sort of a single market, and is sort of trying to regulate the European market. So you see the need of having the external input for a lot of the policymakers, because even if you were trying, you wouldn't be able sort of to have a full grasp of any policy area that you're supposed to vote and make legislation on. So I think it's something very natural that is needed, and sort of also good for good policy making.
And what was your story, Martinho, with this? Have you done this before?
No, I'm a lawyer. I'm a lawyer by trade, and so usually I don't proactively go to regulators. I go because usually, or I go proactively if the company that I'm advising wants to license, wants to have a license, or because something bad happened between the company and the regulator, and someone has to go there and pour some water in the fire. No, but at the same time, I think that. And I was in the market, in the crypto service market for some time before joining BlockReg. I joined in March this year. I think it's important to for both sides, in a way that if you want crypto or DLT based applications to succeed without having the image of the crypto bro and the this kind of small market, you need to go mainstream. And to go mainstream, it means that you have to go and show to the traditional channels, traditional players, and to the market in general, to consumers, that you are in fact something that offers benefits that there weren't there before, that you're offering services that other providers cannot offer, and stuff like that. And if you do this, you can do this with a product. You can just show the product and try to sell the product, but of course, you also need to show to the regulators, and specifically when we're dealing with money, there is a lot of things, as we discuss here, to be careful about. And so I think it's important to create this bridge. And I think regulators also, I'm sure that regulators and national authorities, political authorities, benefit a lot also from this, because they understand the industry, they understand why it's happening. They see that this is not all Sam Bankman-Fried's type of people, or people that don't understand. There are very good people and more and more good people that have, like, for example, Jorn has worked in the payment industry and in important companies before. I worked in a very important law firm also before, and more people are joining this because they're seeing that this is a technological development that will bring benefits to people. And so I think this movement is good.
And I completely agree with you I see the same trend that, better and better people are coming to the crypto industry and becoming more mature. And I think, like, one of the exchange, which I say that it's really the right approach, is Bitstamp, for example, right? Which we have in Europe. I believe, they are currently operating from Luxembourg, but these are the guys who I would say that, this is flagship, cryptocurrency exchange, doing the right thing in the right way. At least we don't hear anything else, right? Until now. But everything looks like it's a proper business, which with the proper approach to risk, not going full speed, and benefiting from others to drop off, like Binance right now, FTX, Coinbase, Kraken with big problem with SEC. So I think, it's really, gives some hope for Europe to be this leader in terms of the European regulations.
And perhaps to add, I mean, it's almost like a normal process of, the industry becoming sort of regulated. I mean, again, from personal experience, I mean, I joined sort of a bank in 2008. So that was just on the onset of the financial crisis. And then you had, of course, this plethora of legislation on banking services. And I sort of changed to payments in 2013, just when you had sort of PSD2 and sort of
exactly
regulation, and then sort of moved into crypto already sort of with a previous company in 21 when crypto was already being discussed, but you still were in the midst of the discussion on crypto. So I've always sort of seen different sectors that have become sort of more regulated or have become regulated in the first place. And I think that's also a very interesting development, and that requires also, from a public affairs perspective, I mean, it's always twofold. I mean, it's sort of internally also informing, the concerns of the regulator that the regulator has about an industry and why they think they need to regulate it. And then at the same time, when that, also bringing forward the concerns of the industry towards the regulators and sort of clarifying and sort of really educating about the different sectors.
All right, guys, thank you very much for this. I'm really, thank you for your time, and really saying that if anyone wants to go at the European and talk to someone at the European level, they should talk to you guys, right? If they want to have the pan-European license, talk to BlockReg.
BlockReg advisors.
Exactly. So I'm very happy to promote you on this from my angle. I met you guys in Barcelona, and I was impressed with the quality. So definitely something that I would 100% support. Thank you very much, guys.
Much, Paweł.
Thank you very much. And thank you again for having us here on this podcast.
Crypto Compliance, brought to you by Gatenox.